welcome to this Final Bell here on the Rural Radio Network. I'm Susan Littlefield. We are going to be taking a look at a variety of different things today. Weather. It's kind of turned into a weather-related type of market. The holiday trade that is upon us and the kind of regurgitation of what happened in Tuesday's report, how it affected the trade as we finished up the trading week. Of course, markets did see an early close on Thursday, closed all day Friday because of the 4th of July holiday on Saturday. So lots to look at as Darren Fessler joins us with Lakefront Futures. And before we even get started, I have to say congratulations. You have not been on the air with us for a while. That's not the congratulations part about it, but you and your wife welcomed a beautiful baby boy.
Yes, thank you so much. Yeah, Carter, what his name was, and everything is going good. He's a healthy baby boy.
Well, congratulations to you guys. And I had a chance watching your Snapchat earlier in the day, and I liked the fact that you said weather. And that pretty much seems to kind of sum up what we're seeing within this trade.
It is. I think that we came into Monday and even Tuesday's report thinking that we're going to probably see no less than 94 million acres on the report, and we got 2 million less than that. So really, from a supply and demand standpoint, we really got to rethink our balance sheet and rethink of how what this crop is going to be going forward, and really what's the weather going to do over the next couple of weeks, because 90% of this crop is going to pollinate between July 8th and July 20th. If we run hot, dry, it may have a huge impact on that. But we're also coming into that critical growing stage where Minnesota, Iowa, South Dakota, a big chunk of Nebraska, West Central Illinois, they are looking really good. It's the Eastern Corn Belt that has missed the rains, the Indianas, the Ohios, that have maybe some stand issues as well that are going to take it more on the chin, I think, because right now, Iowa and Minnesota, if they stay on the same pace they're on, they could be looking at state records.
You look at that. Now, there are pockets in every one of these states that have good crops right now that are dry. Is there concerns when they're talking the next 10 to 15 days we might not see any precipitation and that pivots that haven't been turned on at this point are going to need to be?
I think that if you got some rain here, especially in Nebraska where you have irrigation, I think you're probably wanting or at least thinking about turning them on to stay ahead of the game just in case we run 90, 95, and you get the wind. The wind's a big contributing factor. We all talk about the temperatures, but that wind is another big factor here. So I just don't want to see 95 degrees for 2 or 3 weeks when we start, pollinating this crop. If we do, we're going to have to readjust maybe what our thinking is on the yield, but we do have a January or a July WASDE report coming up here on July 10th. So, I don't think the USDA is going to move the needle too much on the yield, especially if conditions are north of 70% yet. Where they're probably going to do that is the August report, and that's going to be determining what the next couple of weeks look like. So right now, I think things are in good shape, but obviously the European models and the GFS models are showing little precip and pretty good temps.
So before we jump into the soybeans, I want to kind of reiterate back to Tuesday's report because a lot of pressure might be put on this corn market because of what many said was a surprise in the drop in acres.
There's no question about there was a big drop in acres, much more so than what the trade was thinking. So moving forward, yes, we took nearly 1 billion bushels off this potential projected carryouts. So, but if we take a look at the overall yield right now, could we have less acres, but could that yield, if we catch some rains here, could that yield increase? Even at today's numbers and projections, we're still looking north of 2.5 billion bushel carryouts on the new crop balance sheet. So it's not like we're exactly tight supplies. We're still pretty hefty on the supply side. I still think that there are still risks to the downside in this market regardless, but right now it's all weather trading right now, and the next 10 days are going to be a big determinant of how and what this market does moving forward.
And some of these soybeans, we're starting to see blooms on these plants, so that just adds a little bit of pressure as well.
Yeah, on the bean side of things, we've had a nice rally. We were thinking, okay, if you got, corn acres didn't move much, well, these bean acres are going to move higher. Well, they didn't move higher at all, hardly, and I think that's really the contributing factor why beans have made the move they have. They're off 70 cents off the April lows. So can we move higher? Yes, there's still a gap at 903.5 on those November beans, but July is not the month that beans really make the turn, and it's the August. So we run hot, dry August. Yeah, beans can still make that move higher.
Any surprises for you as you looked at that report on Tuesday for the soybeans?
Not a whole lot. I'm a little bit shocked why we didn't have more beans, especially what was going on at corn at that time of planting, especially following the March planting intentions report, which was high anyway. There's no way we were going to maintain 97 million acres, but I don't think we're at 92 either. So I think there's probably some justifications that probably need to be made from the USDA standpoint of where these numbers are, because they just seem like they're one extreme or the other anymore.
So are we to the point in the market trade that we can move past this report and be focused on what's going to happen post-holiday?
Yeah, we got to use the numbers that are currently being traded, and that's the 92 million. We got to focus on getting targets in place, getting where we need to be making some sales or some HTAs, and go from there and have a plan in place.
So I've already seen it. I've seen the comments coming on social media, and you and I were talking about this before we started recording Fontenelle Final Bell. Does it surprise you that there was been questions to those USDA numbers?
I don't think there's been questions about it. I think that a lot of people, they judge the USDA based on what they come out with, and can we realize what these numbers mean? And because anymore it seems as though the trade is. The trade has their own certain guesses, but the USDA is coming out with something so far extreme on both sides of the coin, and it for common sense purposes, it doesn't make sense to a lot of traders, farmers, regardless if that's as bullish or bearish.
All right, well, stick around, folks. We come back, we're going to talk a little bit more about the psychology of the producer. Nobody ever thought they were going to be psychoanalyzed during this program, but it might just happen today. And we'll look at what's been happening on the livestock front, as well as a lot more of the discussion. Stick around. It's the Fontenelle Final Bell on the Rural Radio Network. Welcome back to the Fontenelle Final Bell here on the Rural Radio Network. I'm Susan Littlefield. Just a reminder, we're being broadcasting today from the Nebraska Soybean Board Studio, which is brought to you by Nebraska soybean farmers and their checkoff, as Darren Fessler continues to join us. Psychology of the producer. I mean, in a lump sum, there's a lot going on, whether you're a grain or a livestock producer, and relying on each other.
Yeah, it seems as though this year, as 20 plays itself out, it's a basket of emotions is what I want to say. Because, before, a week ago, we were like, okay, well, a lot of producers I talked to, let's just tank the market. We're going to get a higher PLC payment. Now it's like, well, wow, we got something going here. Let's just rally it. But we're kind of in the middle of the road here, where we're not good prices. We're not terrible prices. We're kind of in no man's land on this market, and where before Tuesday's report, there was like no hope for this market. We're going to have a 3 billion bushel carryout. Now it's like, wow, okay, now we got a 2.5, not as bad. But now what do I do with my crop? A lot of stuff that's undersold. Do I price it here? What should my targets be? But there's a lot of producers the last 2-3 days now that have either sold a lot of old crop, have priced some new crop, or even if you've had some basis pushes, they've locked a lot of basis. And even for some of the co-ops I work with out in the Eastern Corn Belt, one in particular, the last 2 days have bought over 2 million bushels of corn. So corn is moving. And I think if you look at the quarterly stocks, there's plenty of corn out there if you look over year numbers. So the psychology of the market right now is a lot different than what it was just a week ago.
So how do we play on that? I mean, obviously we keep the emotions in our market trade, but we don't want to market on the emotions.
Yeah, marketing or trading on any type of emotions is not a strategy. Hope is not a strategy either. You really got to think of the bigger picture things and keep things intact. I mean, don't play on that. Well, we're going to go to $4 or we're going to go to $3. I think you got to look at where your overall landscape is. How does your crop look? Where really is your targets at? Do you need to get targets in place? And really just get the plan in place now, because we are in the time of year where the market typically gives us a little bit of an opportunity. I think Tuesday's report has given us that opportunity. Now, I can't say for sure if we're going to go a lot higher. I mean, on the D's corn, we did reach the 50% retracement from the January highs. So is that a level where we need to be looking at pricing, or do we need to get some hedges on? Again, I think it all comes down to the next couple weeks and what the weather is really going to say right now. Because, again, clients in Minnesota and Iowa and a good chunk of South Dakota, their crops, as of right now, look very, very good. Record potential there if it maintains the current conditions.
What's the psychology on the livestock side?
I think it's really a mixed bag. There's not really a story there right now, and I think if you take a look at all the headlines that are starting to come out about Texas and Florida and California and all these coronavirus cases and the potential of them shutting more restaurants down, well, that's a huge source of demand for these, the hog and the cattle markets. But you look at how we've traded it, especially on the fats and the feeders. Yes, we have been on somewhat of a channel range, but we've had a really nice trade the last couple of days. And if you look at some of those deferred months, the April 21s, the June of 21s, like the next summer and spring months, they continue to rally and have nice performance there. So I think in general, I think these markets can run. It's good to see that, they're still making higher levels, even though we're seeing a lot of headlines about the new coronaviruses popping up and, the reclosing of some of these restaurants. So I'm not, that bearish cattle, just a little bit cautious.
Consumer demand hasn't been talked a lot about in the marketplace. Is it because when this whole thing started, we saw that surge and let's buy everything we can, and now it's in our freezer, so we really don't need to be going out buying more hamburger, more steaks, more pork chops?
Yeah, there's definitely that aspect that has taken place. There's no question about it. You see that in the box beef prices. We are into those summer months where, a lot of stuff wants to be, want to be outside. You want to grill. But I think a lot of that has taken place, and, that's not the key aspect, I don't think, of the cattle or the hog market at the time being. But we really need to reestablish that uptrend on the restaurant side of things, and because that, if we can, reestablish that demand, I think that everything works itself out in time.
Hog market, what are your thoughts?
Fundamentals are really bad. There's no question about it. If you look at the hog and pig report here, a lot of people have a lot of hogs out there still, and where we're in a downward trend, I think that just kind of like the corn market, where it's sleepy, the fundamentals are bad. Who knows? I think that this market right now can present some opportunities to the upside, in even fact that the fundamentals are bearish. Well, corn fundamentals are somewhat bearish too, and we look what's happening there. So I don't want to discount the hogs and the potential the hog market could have.
For our grain and livestock producers that want to sit down and have that conversation with you a little bit more, how do they get hold of you?
They can reach me directly at 402-366-0423.
And of course, follow you on Snapchat. Some great information always through the marketing day.
Absolutely.
Well, thanks so much. Darren Fessler has been joining us today. It is a Fontenelle Final Bell. Just a reminder, commodity futures and options do have a substantial risk of loss. They're not suitable for all investors. That is the Fontenelle Final Bell, being brought to you by Fontenelle Hybrids and all your local Fontenelle dealers. Check it out as a podcast at ruralradio.com or wherever you subscribe, and you can find it on Spotify as well. It's the Fontenelle Final Bell on the Rural Radio Network.